Here are some don'ts in the stock market. So let's get into it. If you have been investing for a while, some of these don'ts are going to be like duh, no-brainers. But if you're brand new to investing, these are definitely some tips that you need to heed warning to because they can become damaging if you don't pay attention to them. The very first thing is don't try to time the market. Unless you've done a lot of research into technicals, and even then it becomes very scary to just try and time when the market is going to be at the very top and when the market is at the very bottom. The best way to do everything is just invest in a company that you believe in. Wait for a pullback to actually invest. Don't be afraid when the market drops to put money into the stock market, because that's how you're gonna really get those gains that you're looking for. The next biggest thing is don't trade on emotion. Just because you think something's gonna happen, or because you're fearful of something might happen, those shouldn't be the reasons why you're trading a stock, why you're selling, or why you're buying a stock. You should do all your research, do the due diligence that is required to actually evaluate a company properly, so that you know that you're making a smart investment. And that way, when it comes time for people to when people are freaking out about a company or about a stock, you can accurately assess that situation and make the right call. Don't wait to start investing. So basically, you should start investing right now, right this moment, as soon as possible, because the sooner you start investing, the better the returns are going to be, the better the compounding is going to be. With that being said, there are safe alternatives to rather than just stock picking. Like, do an index fund, do a mutual fund, Find something other than just picking your first stock. But you should be investing. You should get that money into the market so it's working for you and not working against you. The next thing is don't invest money that you're gonna need. So if you're putting money into the stock market that you're gonna need within the next 4 or 5 years, there's definitely no reason that you should be putting that money into the stock market. You should put it in if you don't wanna see that money again for 20 years, because you want that money to be in there working as much as it can for you and really getting that compound interest working in your favor. On the other side of that, if you put the money into the stock market and you lose it, there's no way to get it back. So if you're gonna need that money, you might as well just keep it in your savings so you have it when you need it, whatever you need it for. Don't follow the crowd. It's great to understand what the crowd is doing, but don't follow the crowd. You wanna get into investments early on, and you wanna do your research and you want to follow along, but you don't want to jump on the bandwagon. Once those stock starts moving, that's too late. You've already missed it. You need to get into it before it starts moving. And that's like the biggest thing, is being patient. You should trust that you're doing the right research. Be happy with what companies that you're investing in. Then be cautious and be patient. It can go down right away, and that's fine, as long as you hold it long enough to where it comes back. And have a plan for when you're going to get out of a stock. If you put in money into a stock and you're like, well, once this gets down 10%, I'm definitely gonna get rid of this. It's obviously I made a bad call. Then that's what you gotta stick with. You can't be changing it on the fly. The next thing is don't buy stocks, buy companies. So a stock is basically just a share of a company. So you have to make sure that you believe in the company that you're buying the stock for. Don't just buy the stock because you think that it's a good stock. That's why penny stocks cause people to lose money so often, because people are just buying stocks, they're not buying a company. So you have to really make sure that you believe in whatever your vision is for that company, and that thing's gonna happen. And then also believe that the management is gonna be able to pull off whatever they say or whatever you believe is gonna happen for that stock. Don't ever, ever, ever open up a margin account. And I can go into this more. I might even make a separate video for this, but don't open up a margin account. And what a margin account is basically using money that you don't have to invest in the stock market, which it sounds like it's going to be better because you'll have more money to actually get all those gains. But also, if you lose all that money, you are also in debt now. So never open up a margin account. Please don't. I beg you, do not open up a margin account. It's the worst thing you could do in the stock market. And if you don't believe me, there's plenty of people that agree with me, and one of the most famous ones is Warren Buffett. So if you don't believe me when it comes to investing, please believe Warren Buffett. Don't forget that you can lose all of the money that you put into the stock market. Make sure that you have everything that you need taken care of at home before you start investing, because you can lose all your money, and it is very unlikely, but it is possible if you don't know what you're doing. So please be patient, be cautious, and be safe when you're entering the stock market. And then last but not least, don't believe everything you hear on YouTube, read, or anything like that. Do your own research. There's people out there that are gonna make up stuff or come up with things just because it's gonna help them grow their money. So if they can trick a whole bunch of people to invest into a company and the company goes out and then they sell, they made all the money they needed to, but you're the ones that get hurt when they sell out their big position. So don't believe everything that you read or hear on YouTube, including me. Like, just take everything with a grain of salt. You know, make decisions for yourself. Don't trust somebody's gonna know the next best stock. It's really gonna take you putting in the time and the effort that gets you more money than you just listening to someone who does their own research and does their own things, because they might be researching or they might have a philosophy that you don't believe with. So just make sure you're taking everything with a grain of salt. If you enjoyed this video about your don'ts, make sure you hit the like and subscribe button and the notification bell so you're getting these videos as soon as they come out. Again, if there's anything that I can help you with or any questions that you have, don't forget to leave a comment in the description below. If you don't feel comfortable commenting it public, you can email me. My email is in the description below. Thank you so much again for everything that you guys do. Love you guys so much. Bye.